Hi traders, and welcome to the latest edition of the Keyzone Traders Trade of the Week. Now this week we're going to look at a strategy that we actually executed for our expert alert service this week. It was a textbook strategy, and the lesson to be taken from this one is sometimes good strategies just lose. So let's go take a look at the charts. Okay traders, so welcome to the Keyzone Traders Trade of the Week. Now this week, as I say, it's a really nice setup. It's going to cover a lot of the aspects that we always talk about, but this was a losing trade. Now I know I have covered this sort of lesson before whereby sometimes trades just lose, but it is a really important lesson to learn as a trader that you don't overcommit just because something looks like it's an absolute textbook setup. All trades at some point will lose. There is no guarantee when it comes to trading that a specific trade will win or lose. So it's important that we understand that and we leverage consistently so that we just let the probability of our trade plan play out and just trade responsibly at all times, and we don't let our emotions dictate our trading decisions. So this was our report on Wednesday on the DAX, and we basically said, look, aggressive support was at 14,155, and if we held support there today, we could see moves towards the main resistance at 14,300 to 14,330. So we had the main resistance zone on Wednesday at 14,300 to 14,330. So going on to the hourly chart, this was a signal that we took on the hourly chart. You can see here that we have clear support here. We have minor resistance over here as well a couple of times, where it then and we actually had some minor. So earlier on, towards the end of March, this zone had started to act as minor support and minor resistance. We then got into April and we held it as a clear support zone. We got quite a nice reaction from that zone there. When we broke down impulsively through that zone, we then came up and we've tested it. We tested it and we held it as resistance several times. In fact, here and again here, and even again just here. So we had this structure that had played out. We was now sort of in a range. Here on the DAX, you can quite clearly see there's a quite established range when we've been talking about in our reports where price had been quite choppy there for over a week, but we did still have this clear resistance zone at the top. So that was why we established that as our main resistance zone on Wednesday. We then got this push up and we got this reversal candle. Notice again, if we zoom in, you can see this, we've got that liquidity grab around the top of that zone that we always talk about. It's just taken out the highs of that zone. It's taken the stops that it wants to, and therefore if it broke back down, I felt that there was a high probability chance. Notice I say high probability, not definite. It's a high probability chance that we just remain in the range and we could pull back into at least the moving averages on the hourly chart. So we placed a short trade just below the candle. We had our stop just above because, again, we had grabbed that liquidity. If it wanted to go higher, then that would invalidate the trade and mean that it's not doing what I expected it to do, or not, I thought it may do, and therefore it was doing something different, and I wouldn't want to be in that trade. It would have to accept my loss and move on. So with this sort of trade, you can do a couple of things. You can either just go for your 1-to-1, or you can actually target back towards the moving averages, either the 8 or the 20, and improve your risk to reward. But on this trade, we actually got triggered in, and then it just reversed. Now it did meander around for a little bit before then eventually stopping us out when the US opened. And notice how from this point you can start to see that this wasn't really reversing. We wasn't getting any momentum to the downside either anyway, and it was actually just holding this zone and consolidating, looking to maybe move higher, which eventually we did get. So we was right to also have a stop above that point there. We need to accept when the market is telling us that it's not doing what we thought it may do, and come out of the trade and accept the loss. So even when it's a really good setup like this one was from a really key zone, it's important that when the market doesn't do what you expect it to do, you just accept your loss and move on to the next opportunity. So although this was a losing trade, it's you learn the most things from your losing trades, and this one I would not do anything differently if the same opportunity faced me again. It was just a losing trade, and we just have to accept that and move on to the next opportunity. There is no such thing as a holy grail formula in trading. There is no such thing as a 100% winning system. So you just have to accept your loss and you move on to the next opportunity. So that's the trade of the week this week. Hope you found it useful. Please keep an eye out next week. We've got Keyzone Traders is turning 1 next week, so we're going to be giving out some great announcements and offers and discounts and some great new products as well during the course of next week. So if you haven't already, please come sign up and follow us on our social media channels to make sure you don't miss out on what is going to be some great value to add to your trading next week. So I look forward to that. I'm really excited about that. I hope you found this useful, and I'll speak to you again soon. Have a great weekend.